Take a listen to what legendary investor Tom Lee says about Tesla. Now, I know some people think Tom Lee is just a perma bull. This guy actually was the head of investment strategy at JP Morgan for over 15 years before becoming what he is today.
You know, that'd be like shame on you because you bought it.
You bought the highs.
Yeah.
Okay.
But I mean, like I look at this and I'd say, you know what? I think Tesla and NVIDIA, they've been hit the hardest. Do I think that their future trajectory is worse? I actually think that they still look like great companies. And it's not like, in Tesla's case, it's not like their competitive position has worsened. It's probably strengthening.
Tesla's competitive position relative to other EV companies.
Yeah, and their leadership in, let's say that there's, like, if you ask a technologist, what's the next big thing? It's going to say robots. Tesla's, country mile ahead of a lot of people on robots.
Okay.
So it's not like being down 35% has changed their competitive position.
If you had to make a guess, if an announcement came out tonight, Elon stepping away from the government, like, I've done everything that I set out to do. I'm going to leave my team in place. I'm going to go back to focusing on Tesla. Does Tesla stock go up or down on that news?
Well,
let me tell you why I'm asking you the question. The stock had a massive rally when Trump won the election, and Elon was at the inauguration, and there was just this assumption that, like, him having that proximity to the White House was going to be amazing for Tesla. That narrative shifted in the last 10 days to Elon is either distracted or destroying the standing of Tesla in the eyes of half the country and most of the world. So I'm curious what you think.
Yeah.
And I'm not saying I predict that's going to happen, but if that happens, he says, I'm all set. We did everything and I'm good. I'm coming back to Tesla. Does the stock rally because he's not distracted anymore? Or does it sell off because he's not in Trump's good graces?
Well,
what do you think would be the reaction?
I'm going to just imagine why this is happening.
Okay.
So let's say he steps aside because Doge found the $2 trillion or $1 trillion. So he's like,
we did it.
Yeah, we unleashed the algorithm. And so he's going back to Tesla.
Right. I could picture this, by the way.
Now he can profit from his time in the government.
Okay.
He couldn't profit while he was here to help Tesla. Now he goes back to Tesla. Tesla becomes like the official vehicle for like everything the government does. Like, Tesla probably goes
20%.
Yeah.
I mean, it's down. It's in a huge drawdown, so it wouldn't be that much of a surprise if it did that.
Yeah.
What do you think?
Yeah, I agree. I think it would rally pretty hard. Hey, we should have started the show with this, but is the bull market over?
Yeah. By the way.
Yeah.
Is the bull market over?
No.
You don't think so?
The bull market. I would be surprised if it's over. So I shouldn't say no like I know because I don't know. I'm sorry. But I'd say the probabilities are very remote because if you look at all bull market major tops before a 40% drawdown since 1900, all of them could have been predicted with a 40-year lead time based on births.
So you think
immigration deaths.
That demography thing is still enforced no matter what they do to try to mess it up?
Yeah, that's right. Because if you cut the population by just 20-year intervals and you mark the peak of each cohort, it marked the 29 top, the 74 top, the 99 top, 2018 top, and the next major top shouldn't be till 2038.
So you're not talking about the cyclical bull.
Wait, 20 what was the year?
2038.
All right, I feel better now.
But you're not talking about the cyclical bull market then. You're talking about like the 2009 run up until now.
So a major, the kind that could unwind the entire bull market.
Okay.
All right, so we have more than a decade. I feel better now.
So we're okay.
In this video, I will share with you all of your Tesla stock breaking news that you need to know and what could be happening this week for Tesla stock. Tesla had quite a large recovery from the low of the day on Friday when Tesla stock hit $250 per share, closing almost $13 higher at about $262.32. This is a hammer candlestick pattern. Typically, this does indicate upside. And I'm not the only one that thinks tactically in the short term we could see a bounce. This article from thestreet.com says rare event could send Tesla stock surging. And just to scroll down to this rare signal. It says here, given that backdrop, it's easier to understand why Tesla's shareholders have grown antsy and why their shares have slumped. Talking about the delivery slowdown and the political affiliation that Tesla now has. While Tesla's stock may continue sliding, some signs are starting to suggest that the selling may be getting overdone. If so, Tesla's stock could soon experience a relief rally. One of the measures that may be flashing by is the Relative Strength Index, or RSI. RSI measures price action over the preceding 14 trading days and can signal when stocks become overbought and oversold. When the RSI is above 80, it signals buyers beware. However, when it dips below 30, it can suggest that shares may be about to move higher. Tesla's RSI eclipsed 80 in mid-December when shares were near $480. On March 7th, when the price was about $263, it was 27, a third consecutive day below 30. Quote, the RSI is oversold for the first time in almost a year, wrote longtime technical analyst Jason Meshik in a post on the Street Pro. There's support here from both the uptrend line and the peaks from the last July, September, and October. If shares find their footing, how high can they go? Quote, trend and momentum support a bounce, said Mishnik. A trading bounce to $300 or $325 seems reasonable. Which, that's not a small move at this point. Just to get back to $300 would be a 15% move higher from here. To get back to $325 would be about a 24% move higher from here. Like that's not just a small bounce. That would be a surge in Tesla stock. Now, unfortunately, if we take a look at Bitcoin has started to sell off quite dramatically in the last couple of hours from about $86,000 over this weekend, now down to $82,250. That is down on a percentage basis about 4.4%. That's not a great sign heading into this upcoming week, in which the markets have really been selling off. And this week's really critical for markets because, yes, we're here at this 200-day moving average, and history suggests that if we continue to sell off from here another 3.5%, then we could enter a bear market in the next year. In some Tesla stock breaking news, the head of AI, Ashok Alashwami, says thousands of Teslas drive themselves each week to loading docks, which, again, is furthermore validation that Tesla is excelling with AI. And Elon Musk confirms that the total completion cost of the Tesla Cortex AI training cluster will be about $5 billion, which is going to more than double the current training compute cluster that Tesla has. And Sawyer Merritt was out at Giga Texas and showing us some of the cybercaps that are autonomously just cruising around at Giga Texas, which is also pretty cool. How futuristic is that? Like Investing on X says Tesla is showing signs of nearing its official bottom very soon. Sellers are slowing down, with institutions and whales loading tens of millions worth of Tesla calls. Once Tesla shows some upside strength, then that'll confirm a larger move to $500 plus soon. Now, I don't agree that it's going to be soon necessarily, because I think there's a lot of risks out there, okay? I think it's clear the administration wants to push us into a recession or close to one. They want to drive down 10-year treasury yields. It's growing more obvious and more obvious by the day. And in that environment, Tesla's not just going to rally back to $500 in, a couple of weeks. It could take some time. And, this is actually very bullish if you are, longer term focused, right? Because it gives you time to buy, right? If we went into another 2022 kind of situation, which I don't know if that's going to happen, but if we did, you're going to have months and months and months potentially to buy. And that's what's going to set you up to come out on top of it. And, you know, if maybe you didn't trade 2022 as well as you wanted to, maybe you didn't buy as much as you wanted to. Well, you could have another opportunity for that. I mean, take a listen to this. Like, this is actually funny, right? Okay. Trump downplays business concerns about uncertainty from his tariffs and the prospect of higher prices. It says here, asked about the Atlanta Fed's warning of an economic contraction in the first quarter of the year, Trump seemingly acknowledged that his plans could affect U.S. growth. Still, he claimed it would ultimately be great for us. Quote, there is a period of transition because what we're doing is very big, Trump said. It takes a little time. It takes a little time. Yeah. That's a way of saying, I don't care what happens to the economy in the short term. I mean, I think we should pay attention to that. Trump brushed aside concerns from businesses seeking stability as they make investment decisions. He said that, quote, for years, the big globalists, have been ripping off the United States. And now all we're doing is getting some of it back. And we're going to treat our country fairly. You know, the tariffs could go up as time goes by, and they may go up. And, you know, I don't know if it's predictability, the president said. I mean, that's probably what has Bitcoin under pressure. And I imagine if markets are lower coming tomorrow, it probably has to do with the threat of tariffs going higher over time, not of, you know, Trump cutting deals with Canada, Mexico, China, Europe, and other countries. April 2nd's rolling around here pretty soon, and that is the big reciprocal tariff day. So this is not going away anytime soon. And honestly, to me, this sounds like Trump is just saying, if we go into a recession, we go into a recession. That it is what it is. And, you know, I think that's their ultimate goal here, because if you go into a recession now, you can easily blame Biden, right? You can easily blame the other administration. Just front load all the pain now, blame someone else, get it over with, so we can have a good 2026, 27, 28. I think that's the plan. I mean, like, logically, that is what they're trying to do, right? And I think we should pay attention to that because, you know, for Wall Street, I think they expect if the economy weakens further that Trump's just going to back down. And to me, that does not seem like the case. This does not seem like Trump 1.0, just to back down when the economy or when the markets start to throw a fit. I do think that means interest rates are going to plummet this year. I think the Fed's going to cut rates a lot. Even if we don't go into a recession, the economy is going to weaken from these policies. There is no other way around that. And ultimately, yes, could this send Tesla stock lower? Of course. But it will end up being a positive for Tesla, right? We're essentially going to reset. We're going to reset interest rates. We're going to reset the economy. Longer term, this is great. Like for your kids' sake, this is great. Because Trump and the administration is trying to get ahead of a crisis. Okay? Instead of 10, 15, 20 years from now, 10-year treasury yields being 10% because the government's in such a bad financial situation, they're getting ahead of that now. And they're fixing the problem now. In the short term, that sucks. But longer term, that's good, right? Your kids are going to be in a better position for that. You're going to be in a better position for that 10, 15, 20 years from now, even maybe in the next couple of years. But in the short term, it's painful. And I don't think that is priced in with the S&P down 7%. The real question is, what is the timeline for this? Does it happen in the next couple of months? Does it take longer than that? How do you hedge portfolios? You know, how do you account for that risk? And that is what I'm currently figuring out. And Tesla, I mean, is down almost 45% from all-time highs. You've priced in a lot of that risk already. Sure, could Tesla fall further? Of course. But I want to be buying at these levels and the further it falls. Now, Google Trends data for Tesla today is really starting to tick upwards, which is a great sign. Cybertruck went from 15 to 17, Model Y went from 13 to 15, the Model 3 went from 10 to 11, and the Model S and the X are stagnant at 5 and 4 respectively. So you're starting to trend upwards for Tesla's search trend activity, which is a great sign. As I showed you in previous videos, option activity for Tesla on Friday was quite negative. You had $1.36 billion of hedge fund and institutional option activity, totaling a positive order value of 34%. Over the past week, it's almost exactly neutral, 3,150 different trades, totaling $10.82 billion, with a positive order value of 49%. Okay, nothing to really see there. On Friday, though, you had 912,000 shares that were covered by hedge funds and institutions. They are covering as Tesla is falling. That is a great sign that, you know, they're not seeing too much downside from here. Okay, does that mean guaranteed the stock is going to recover soon? No, it just means that short sellers don't want to bet against Tesla here after the fall that we've seen, which the short interest is at the lowest you've ever seen in Tesla's business history. It also suggests to me there's probably going to be good news coming in the next couple of months because, you know, hedge funds and institutions, they typically don't cover on short positions as stocks fall because stock prices are usually correlated to business fundamentals. And in this case, Tesla's business fundamentals have gotten better, right? There's been a lot of great news recently, but the stock has fallen. Usually when the stock falls, like the business is getting worse. And I think that's why short sellers are not adding to positions right now. They're covering because typically value, like a business fundamentals value, you know, you can kind of see how the value is through the stock. And right now, that's not the case. Tesla's value is up, the stock is down, which is not a very good, I guess, short thesis to short a stock. And ultimately, I do think this week for Tesla, we could see a bounce. You're also hitting this trend line. You're back to essentially your pre-election levels before you ever got that Trump boost. So you've given all of that back. And I think it really depends on the economic data this week, you know, what happens, any new tariff headlines. The news is really newsy lately. If we, you know, get bad news headlines, then that's a problem, right? That's what's going to send markets lower. But I think generally speaking, you're due for a bounce, right? You're especially due for a bounce in Tesla. But could the markets bounce a little further here? Yeah, I mean, from the low of the day on Friday to where you closed, you bounced about 1.7%. So that's what's kind of weird about what we've seen lately is just in one day, you know, the volatility has been wild where some of these bounces are 1.5%, 2% from the low. And then it begs the question of, did we just get a bounce? And does that set us up for another day of moving lower? Because we're getting these bounces of like 2% in a single day. You know, even Thursday's, you know, high to low move was 1.8%, right? The day before that was like 2%. Almost every day there's like a 2% round move on markets. So yeah. Could we fall? Of course. But if we start to get any positive news, that could also fuel a little bit of a short-term recovery. But I have a feeling it's only going to be short-term, and the rally's probably going to be sold from institutional investors. But yeah, I do think we are far overdue for a bounce. And if we do get a bounce this week, a retest of that 200-day moving average could certainly be in the cards. Again, if we start to get some good news, then a retest of 300, potentially 310 could be in the cards. I think 310 is the first level that you'll start to get a lot of resistance. You also have your 20-day moving average here at about $317 per share, and then obviously $325. So a bounce to this range would not be, out of the blue. Like you should almost expect that if things start to get a little bit better. So let me know what you guys think about this information down below in the comment section. There was not much for news to actually go over today. In the next video, we will be looking at the economic data coming out this week, the earnings calendar, some more headlines, and my overall opinions on markets. And again, the warning that I have that this is probably going to get worse before it gets better. And I know, being a bear sucks. And I tend to be uber bullish. But like the administration is telling you, I don't give a crap what happens to the economy in the short term. It feels like they want to push the economy into a recession or close to one to kind of reset things. And that's not a good situation to be in. Again, with the other backdrops that we have, like the Fed concerned about inflation and all of that. So let me know what you guys think down below in the comment section. Have a great rest of your day, and I will see you in the next one.